Good morning, guys. How are we doing this morning? Welcome to today's London session Market Color with Value Flow Trading Team. It's brought to you by the Preferred Broker and our Preferred Broker, powered by them, Octa, formerly known as Octa FX. Also, it's brought to you by the Value Flow Trading Team, Ejimi, Adegbeye, Olufukeji. So you all know today is going to be a special edition. By special edition, I mean we're bringing up a guest market analyst, right? Shortly on the second part of this session, we'll be coming up the CEO of Paris Trading Institute, and shortly it will be coming after this first session of the analysis. His name is Bala Francis, Mr. Bala Francis. So while we do that, I want us to do our normal routine, which is, like I know, you send the link to this market color session to as many as possible to different trading group you belong to, individuals are interested in trading, and specific persons that this session is going to help. Do well to send the link. The link will be typed in the comment in the chat box in less than 3 to 5 seconds. You see it there. Just pick the link and then post on your WhatsApp status, post on your IG story, post on your Facebook groups, different Facebook community, different community that you belong to. Do well to share this session to them so that it can also benefit from this value we are sharing from the studio, right? So the link is already in the chat box. Just do well to pick it and then drop it on your WhatsApp status. Thank you so much as you comply to this instruction. Thank you. So right about now, I'll be jumping to the chat to see what we have for today. We jump into the chat to see what we have this morning, especially on our US 30. See what the market has for us this morning. Not so much has happened. In fact, let's start by our fundamentals today. There's a lot of fundamental coming out, which will determine our analysis on the indices, right? By 1:30, we'll be having core PPI. That is what producers, what's it called now? Index, right? Change in price of finished goods and services sold by producers. So this is going to actually determine a lot today. On Wednesday, we'll be having CPI, right? And we can have an insight. We can get an insight from the numbers, from the data for PPI today into our own CPI tomorrow. We are waiting for this data. Everything is slowed down in the market because of this CPI data, which we believe it will inject volatility or momentum into the market. All right, if these guys should come out lesser than that, lesser than the expected, that means we have producers producing lesser goods than they were producing last month. And then that might also be an indication of people not buying, right? Supply going down, which also can induce the data for CPI. If supply is going down, meaning demand started reducing too, which means core PPI might come out probably a little lesser than forecasted. If that is the case, however, if that's not the case, we expect USD to fly to the upside, right? Shortly by 3 p.m., having Chairman Fed Powell speak. By 2:10, what's it called now? Governor Lisa, is it Lisa now? Yes. No, Lisa. FOMC member Cook speak. I think I was reading through it. It's supposed to be Governor Lisa also. Yes, Governor Lisa. All right, guys, let's go into the chart for US 30 this morning. Let's see what we're having. And from there, we can begin to anticipate what it is we're having today. All right, guys. Last week we had an interesting setup around this level, which actually failed, and immediately it failed. We had to just resort to the aftermath of box strategy. After it fails, what happens next? Once box strategy fails, we are looking for it to push to the upside, which actually happened after all of this drama in the market. Right, we had the setup here, we had the sweep of this structure level, and then inducement here. Price came and because of the news, violated it. However, after the violation, what happened? Tapped into this zone, came back to the zone, and then after both strategy fails, what do we want to see? Price is going to come to that zone and then push to the upside, right? Came back to this level, and then this actual level where the failure happened, and then what did we see? So it began to push to the upside. However, from the daily time frame, let's start from the daily. What do we see here? It's quite interesting that we can see the price has gone to fill 50% of this fair value gap here. Fair value gap. Price filled 50% of this fair value gap, and then even more than 50%, right? Seeing it give us kind of a rejection from that level, which indicates that we might see price begin to move lower to the downside. And see price begin to move lower to the downside. However, fundamentally speaking, we are waiting for CPI to give us clear-cut direction. PPI will give us an indication of what we should anticipate, but we are waiting for CPI to give us clear-cut direction because it's one of the strongest leading indicator for inflation. So if we should get that data and it aligns with, it should give us a clarity on whether we should buy or sell in the long term. However, but for this morning, I'm looking forward to sell US 30. From the daily, we've seen that filled this imbalance, and then from the short-term swing, CPI is tomorrow, PPI is today. I mean, I've answered your question, Mr. Tunde. Sorry, Mr. Tunde. Okay, from this swing, we've seen that price has gone into a very good premium level, right? From this swing, we've seen price tapped into a very good premium level, and probably is going to just tap into this other block and then also tank to the downside. But what am I looking for? I'm looking for a sell on US 30 today. We've seen it fill 50% of this imbalance here. At least want to see it tank to the downside a little bit before we continue the push to the upside if CPI or PPI data is going to assist in doing that. On the 4 hours time frame, I'm now having some little concern because with that sharp drop that we've seen on the daily time frame, it didn't break any structural level. We didn't see any change of structure in the market. So I'm patiently waiting for this to happen. I want to see a change of structure to the downside. If I should see that change of structure to the downside, I can now begin to consider price coming up to break, to touch and test this other block, and then we see a drop to the downside. On 4 hours, I've not seen that break of structure yet. It's not clear. There's no much clarity on 4 hours. On 1 hour, it's still the same. We've been seeing price ranging on this level. I've seen a sweep of structure, a sweep of this last shoulder, and then I'm waiting for this sharp break. I will have considered the sell if the selling pressure was strong enough to clear all of this last flow, but it didn't happen. What we saw was price came almost to that level and then started ranging for a while, for a bit before. Yes, started ranging for a bit. So nothing is really clear on the lower time frame to support a sell for now because we've not seen that sharp drop to the downside. So all we can do now is just wait for PPI to come out by 2:30. PPI should, I think it is 2:30. Yes, 1:30. PPI is 1:30, just some hours before the New York Open. So if that data should come out, we should get an insight of what price is going to do and anticipate the main data for tomorrow, which is the CPI. So that is what I'm looking at for you on US 30 for now. If we see a sharp drop to the downside, which breaks this point violently to the downside, then And most likely, we just wait for a retest, this fair value gap, or this tap into, or a tap into this other block to sell to this other block here. That will be my first take profit on US30. Because overall directional bias, we are bullish. Overall directional bias, we are very, very bullish in this market. Very, very bullish. So any sell we are seeing, if it's not a total change of fundamental, like the CPI news coming out, then just we don't want to hold on to our sell position for that long. We want to ensure that fundamental is backing whatever it is we are having in this market. Believe fundamental is backing whatever it is we have in this market. So guys, that'll be all for US30 this morning. Nothing much has really changed because of the news that we are waiting for. Even on Forex Live, there have not been so much commentary on US30 this morning because of the news. Everybody's eyes is fixed on the news coming out, especially the CPI coming out, right? We should see Fed Powell speak, and I think that should give us an insight, not necessarily, but probably an hint into what will happen. And also PPI should give us an hint into what we should see on CPI, because if the producers change in products and goods and services produced by producer, if it's reduced, that means we are seeing a reduction in supply. And if supply should reduce, meaning consumers, the demand from consumers also reduced. So, but if we see these numbers come out than the forecasted, let's say the actual that came out was much bigger than the forecasted and even previous, then that should give us an insight that our CPI might be seeing a very good data for CPI. So that'll be all for now. That'll be all for now. In the second section, I'll be bringing up our guest analyst for today, who will be doing his analysis on his own favorite pair and giving us his breakdown of how we approach the market. And from there, we can ask our question. So what is the difference between CPI and core CPI? Joshua Kolo, I believe a simple Google search should be adjusted to that. You can just do that from your end and then get your answers. You made mention of Octa FX. What's the minimum deposit for Octa? Minimum deposit on Octa, for us, we're using $500. You can go to their group. You can go to their, what's it called now, their website, and then just do a thorough read on the FAQs. It's already there. You can use that for your inquiry. Right? I believe it should be somewhere around $30 on their website, the minimum. But you can do well to just do a simple Google search, and that will help you get your clarity. If it's about the private signal group that we have, the minimum is 500. It's 500. So thank you guys. Stay tuned. We are going to go on a short break, after which we're going to bring up our guest analyst for today. All right, guys. Cheers and God bless. Welcome back, guys. Welcome. And we want to say thank you for staying tuned once again. Like you all know, today is a special edition of London Markets Color Session. It's the first time we're having a guest analyst on the floor, right? In the studio here. So shortly, Mr. Bala Francis will be joining us in the studio, where we'll be analyzing his own favorite pair. Nothing out of the blues.
Where am I seeing Emmanuel?
All right, guys. Apology for the network glitch. We had a technical glitch from the studio. I believe we're back now. Please, if you can hear me, just type in the chat box. I can hear you loud and clear. Okay, thank you so much. Thank you so much, guys. Thank you so much. Thank you for staying back. Right, like I said, shortly we'll be going into the second section of this market color where we'll be bringing up our guest analyst for today. His name is Mr. Bala Francis, and he'll be joining us shortly. He's the CEO of Charis Trading Institute, an amazing man, amazing trader with proven track record in the industry. Thank you so much, Mr. Bala, for joining this morning. I believe you can hear me loud and clear, Mr. Bala.
Yes, I can hear you, sir. Good morning.
Okay, while Mr. Bala is trying to fix up his own end, I believe we can do well to share the link to this Zoom session.
I can hear you. Good morning.
It's an amazing time. Boss is also on ground. Okay, you can see Boss's comments. Mr. Bala, billions in the building. Of course, can we see some fire emoji for him? Please, you can do that. Put your fire emoji in the chat box, your favorite emoji in the chat box.
Boss, good morning, sir. I celebrate you, sir. Thank you, sir. I think
Good morning, Mr. Bala Francis.
Good morning, Demola. Good morning.
All right, the floor is yours, sir. You can go ahead.
All right, thank you so much. I would like to use this opportunity to celebrate my mentor, Mr. Ejimi, who is also live on this Zoom call. Thank you, sir, for bringing me on board today. It's my pleasure to share with such a great community my insights about the markets going into the second quarter of the year. So quickly, I'm just going to share my screen and I'm going to take us through. Let me see in a bit. All right, so I will start with showing us something very powerful before I go to the charts, because when you see things happening on the chart, it's because there's an underlying driver for every price action. It's not just about the candles alone. There's also an underlying driver driving almost any asset that you see in the market. All right, so my favorite currency pair that I trade is GBP USD and Euro USD. Majorly, I think I trade only these two foreign currencies. So for you to have an effective ride trading any foreign currency, it's important that you understand what is happening in the benchmark asset, or what's happening with the benchmark asset for that particular foreign currency you are trading, because there's something called intermarket analysis. You need to understand what's the relationship between all the four major assets in the finance industry. I'm talking about bonds and interest rates. I'm talking about understanding the relationship between bonds and commodities, stocks and currencies. You need to have an insight on how they relate with each other, how bonds react to stocks, to commodities, and to currencies. So once you understand that, it helps you have, it's actually called intermarket analysis, being able to know what's the main driver at this current time, where is value flowing and where is value going into. Okay, so since I'm focusing on foreign currency, it will be important to understand what is the benchmark for foreign currencies. The benchmark for foreign currencies is the dollar index, which we commonly know, the dollar index, because the dollar index is the main driver for almost all dollar and dollar associated currencies. If you are trading GBP USD, Euro USD, AUD USD, the NZD USD, you need to know what is happening with the dollar index, because until the dollar index is ready, every other thing you see happening on the other foreign currencies will be manipulation. If the dollar is not ready to buy and GBP USD looks like it's ready to start selling, even though you have the setup to sell on GBP USD, but because the dollar is not ready to start buying, once you start selling GBP USD while the dollar is still selling, you know what will happen? The dollar, because it's not ready to start going up, the dollar will continue to go down until it gets to its preferred institutional reference points to start buying. Meanwhile, as it's selling, you had a setup to sell on GBP USD. So you ignored what the dollar was saying and you decided to sell GBP USD. All of a sudden, you discover that GBP USD is going to clear the highs and it's going to keep going high until the dollar is ready to start buying. Then they move in sync. A high probability trade setup is a trade setup that is in confluence with the rhythm of the dollar and the rhythm of the asset you are trading. So if you have a setup on the dollar to buy, you must have a setup to sell on GBP USD. It's not enough to have a setup on GBP USD once you do not have a setup on the dollar, which is the benchmark asset, the main driver. That is not a high probability trade setup, okay? So there is something we use to know exactly what the dollar is most likely going to do in different periods of the year. It's actually called the seasonal tendency chart for the dollar. The seasonal tendency chart for the dollar is classified into 4 contracts. The first contract we see is the March contract, like you are seeing here. And the March contract comprises of the month of January, February, and March. All of these 3 months, we call it the March contract for the dollar index. So we see the dollar posing a tendency to do what it has done over periods of 33 years. This blue line you are seeing on the chart, it's actually a line chart. So the blue lines you are seeing is a reflection of 33-year price data, 33 years of price action. It's a compilation of 33 years of price action for the dollar. Okay, I'm using the data that was extracted around 2018. This seasonal tendency chart is of 2018, but it's almost the same thing. All right, we see the chart doing because it's algorithmic. By algorithmic, it means that it's nothing new. It's something that it has been doing over the years repeatedly, again and again and again. So we see that within the March contract, the dollar has a tendency. Within the June contract, I'm talking of April, May, June, the dollar has a tendency. Within the September contract, July, August, and September, the dollar has a tendency to do something, and likewise the December contract, okay? So we are going to look at what the dollar will most likely do in this season. This June contract for the dollar is showing us that in the past 33-year and 15-year data, the dollar has been doing something significant. What are we seeing? From the month of April, all right, from the month of March, the dollar was bearish, and sometime in May, at the start of May, we see the dollar posing a bullish price action. You see that towards the start of September contract, which is around July, the dollar now started dropping until December contract, which is around October. Okay, so once I have this idea that the seasonal tendency chart tells me that the dollar has a tendency to go bullish from what it has done in the previous 33 years. Almost every year, the dollar does these things. It's usually bullish within the June contract. That is around the month of May. It creates a low and starts to go bullish. Then in September contract, it starts to drop. Once I have this idea in confluence with what we call commitment of traders report, for some of you who are traders in the game, who are long in the game, I'm sure you must have come across commitment of traders. So if you know how to use the commitment of traders report, we actually use these things to do what we call macro analysis, understanding the bigger picture and then fine-tuning your trades into this bigger picture perspective, because until you are able to refine your day trade setups, your swing trade setups to go in the direction of what the macro analysis is saying, you are not going to make money. You are not necessarily going to make money significantly, okay? The best time to make money is when your analysis is in sync with macro picture, is when your micro analysis is in sync with macro analysis. So in the micro picture, we are looking at seasonal tendency, we are looking at COT data, just to have an insight. What is the dollar most likely going to do within these seasons of the year? From the month of May, we expect that the dollar is going to find a low and should start to trade bullish until somewhere around the September contract. It may not be true all the times, but for most of the times it is true, okay? And then you look at the chart between the blue and, is it maroon line now? We have two tendencies. The blue line is the data collected from 33 years of price action. It has been doing these things. Then another data showing us 15 years of price action. It has been doing these things. So we are going to look at our dollar index and see if we have something that is in sync with what the seasonal tendency chart is saying. Do we have a setup that looks like we are bullish on the dollar index? Should we have that kind of setup? Then it confirms to us that we are in sync with what the macro picture is saying, and we may have that our high probability setup we are looking at. Okay, guys? So that is that about the seasonal tendency chart. So let's go to our dollar index chart. I believe that you can see my screen. All right, so this is my dollar index chart. All right, this is the dollar index chart. I really need to know what's happening on the dollar index before I can even say what I'm going to do on the underlying assets, which is my GBP USD or Euro USD, okay? And how I look at the dollar index is the first thing I do on the chart when I come, I'm trying to find what is the overall higher time frame directional bias. It's called institutional order flow of the dollar index. I need to know what the institutions are doing from a bigger picture. The monthly, the weekly, and the daily time frame are called the higher time frames, and these time frames are the main drivers of price action. The lower time frames will always conform into this higher time frame direction. So if the higher time frame is bullish, monthly, weekly is bullish. Even if the daily time frame gives us something that looks like it's bearish, eventually it will still be bullish because monthly, the weekly have more energy than the daily, the 4 hour, the 1 hour, and the lower time frame. So in summary, the higher the time frame, the more reliable the direction of the trend is. The higher the time frame you are looking at in analyzing directional bias, the more the tendencies to be correct you have. Okay, so on the monthly time frame, I'm looking at three things. The first thing I'm looking at is where has price traded away from? That's the first thing I'm looking at when I want to define directional bias on the higher time frame, on the monthly time frame specific. I'm looking at where has price traded away from. The second thing I'm looking at is where is price currently? At the moment, what is the current direction? What's the current institutional order flow? What am I seeing with the monthly candles? Are they showing willingness to take out the previous monthly highs of the candles? In such a case, we know that we are in a current bullish order flow. Are the monthly candles showing consistent willingness to take out the lows and respect the highs? In that case, we have a current bearish order flow. Once I see that, the next thing I'm looking at is where is price heading to? Where is it going to? And that is called the draw liquidity. It means that's the liquidity pool. That is where price is going to go to. All right. Knowing where price is going to is very important because it's even much more important than knowing where price has traded away from. Knowing where it's going to is how you are going to make money. Okay. So in summary, I said in the monthly time frame, I'm looking at where has price traded away from. Has price traded away from a premium institutional reference point? What do I mean? It has price traded away from an overbought region. What does it mean? Has price traded into a discount level? Another scenario you can look at. Okay, what is price doing currently? Is price taking out the previous highs of the monthly candles? Is price taking out the previous lows of the monthly candles? It tells me whether we are bearish or we are bullish at the moment. But again, where is price going to? If we are bullish, where is it going to? Do I have a draw liquidity residing above the marketplace if we are bullish? I know we are headed to that area. Do I have something on the line below the market that's going to draw the market down, that's going to make the candles go down in a scenario where we are bearish? That is where the market is going to go to. You are trying to create high probability scenarios where the market is most likely going to trade into. But again, when you look at the seasonal tendency charts, and you now come to the chart and you see something that is in sync with the seasonal tendency chart, now you have something more meaningful. Okay, now you have something more meaningful. So on the dollar index chart, I want to show you something. You can see that on the dollar, previously we see that the dollar was bullish. Why did I say was bullish? Simple market structure. You can see that dollar has been forming higher high, higher low. Of course, for every new higher high that is formed, we anticipate that there should be what? A new higher low. All right, there should be a new higher low. Now, when you look at previous price action, look at this. This was the last time price took out a structural low. After we created a lower high here in this overall bearish trend, price engineered price action and took out this last low that was formed here using this price action. All right, so by implication, it means that we have a new dealing range between the high here to the low here. What's the dealing range? What do I mean? I mean that we need to see price action mitigate all of this bearish pricing. We need to see the dollar trade into a premium level for us to sell the dollar one more time. For us to sell the dollar one more time, we need to see the dollar trade into a premium level, because you don't buy a market when it is expensive. You like to buy a market that is cheap, and you like to sell a market that is at least premium or expensive. All right, so specifically, we now see the dollar engineer the bullish repricing into that premium mitigation block. Look at it on the left, premium mitigation block. What is a mitigation block? Most times, smart money concept traders are confused about differentiating between a mitigation and a breaker block. But simply put, this is how you identify mitigation block. It must first create a failure swing. It must first create a failure swing, failing to take out the previous high and resulting in a shift of market structure. You see that shift of market structure here, after failing to take out the previous high, leaves you with a mitigation block. So all of this region, the last order block that was violated here, instead of being respected, the last bullish order block that was violated here becomes your bearish mitigation block. So the same thing we see happening here. The dollar created that failure swing, the first high, second low, failing to take out the high, shift of market structure. Then we have that all of the bullish order block around this level. See that? The bullish order block around that level. Talking of the last sell candle that was traded through by one or more buy candles is the bullish order block in that area there. All right, most preferably when using order blocks, we pick the candle with the largest body. So I'm going to pick this. You can see that's the bearish mitigation block. So price traded into a deep premium institutional reference point, which is the mitigation block. And the mitigation block in their order of importance is the first of the 7 institutional reference points. That means where we see mitigation block, we know that it's more powerful. All right, please don't get yourself confused with too much grammar terminology. All right, so but all I'm trying to say is that price traded into that level and created a bearish repricing. Where are we currently? We are in a current dealing range as well. You see that? Price has been forming higher high, higher low, then higher high. What is the current dealing range? It's between the low here, that's engineer the current structure or the last higher high that formed. The low to the high is your current dealing range. Even though you know where price is trading away from, where? The bearish mitigation block. Where is it going to? It's repricing into the current dealing range. Where exactly? At least for us to buy this market, we need to see it trade into a discount. Where is the discount? The discount is 50% of the current dealing range between the low here and the high that formed here. This structure that took out the previous structure, I'm talking of the higher high here, higher low, then this is the higher low that led to the new structure, higher high. This is the current dealing range. The higher low to the higher high is the current dealing range. 50% of this entire range will be the equilibrium, and below equilibrium is discounts, above equilibrium is premium. So let's see if we have that that criteria being met. So you see that I use my Fibonacci to measure that range, and you can see that we have price traded into discount level. What is the discount level? Below 50%. So we are looking at institutional reference point below 50%, and we see that there's a fair value gap right below that 50%. That fair value gap with the breaker block right there, or rather the mitigation block right there. Price formed the low, the high, couldn't take out the low, shift of market structure. So all of this bullish mitigation, price traded into it with the fair value gap, engineered the current price action or the current order flow. So what is the current order flow? As we can see, price created a shift of market structure bullish on the monthly time frame. Took out the low, shift of market structure. The body of the candle has closed above that structural high, retraced into the rejection block here and created a bullish order block again. Look at this current price action. You see that? The last sell candle that was traded through by 4 consecutive buy candles, thereby engulfing the sell candle, is a bullish order block. But if you take a look at the candles, you'll see that the candles have been showing willingness to take out the previous highs. See that? The previous highs is being taken out. The previous highs of the candles, the monthly candles, is being taken out, telling us that we are in a current bullish order flow on the monthly time frame. But if we're in a bullish order flow, where is it trading into? Remember, I said where price has traded away from, price traded away from bearish mitigation, traded into discount fair value gap. And now we are in a bullish order flow because we see the candles taking out previous highs of the monthly candles are respecting the lows. Where is it going to? The drawn liquidity. We identify the drawn liquidity. If we are bullish, we are looking at buy side liquidity pool. So where is the buy side liquidity pool? We are looking at old highs, relative equal highs. We are looking at liquidity voids residing above a high. That will be the drawn liquidity. Okay, so I'm looking at this and I'm seeing that there is an old high here, or relatively, you can call them relative equal high because the body of the candles here as looks equal, relatively equal. So we outline that old high as the drawn liquidity, the first drawn liquidity. Then you can see that there is an inefficiency. One-sided price delivery right here on the monthly time frame. You can see from the sell candles, that sell candles is telling you already there is a heavy bearish momentum, all right, that posed about 5 months of price action without looking back. This one-sided price delivery needs to be rebalanced. It needs to be what? Rebalanced. At least we need to see the institutions mitigate this before we see the new intention to continue selling into September contract. Okay, so this is the buy side drawn liquidity, the old high, the inefficiency here, sell side imbalance, buy side inefficiency. There's an imbalance in selling and inefficiency in buying. So we need to see a rebalancing of that inefficiency here. At the same time, we have a bearish order block. You see that? A bearish order block is supposed to resist bullish prices and should push it lower. The most valid order block is the one that has a fair value gap attached to it. At the same time, we see that there is a fair value gap here that was violated. This will serve as support turned resistance. Should price action trade into that level? You can see it here by the left, very tiny price action traded below it. The fair value gap should have supported price to continue going up, but they broke that level giving us a bearish order block. You can see that. We need to see the candles trade above that high and trade into that bearish order block and that tiny fair value gap that was violated by the left. It's called support and resistance in smart money concept. Okay, so this will be support turned resistance in near future. This is what we're looking at. Then on the weekly time frame, what are we looking at on the weekly time frame? On the weekly time frame, we are simply looking at price creating expansions in the direction of the monthly order flow. So if we are bullish, we need to see bullish expansion, bearish retracement, bullish expansion, bearish retracement. I mean, bullish impulse, bearish correction, bullish impulse, bearish correction in a bullish order flow of the monthly time frame. That's what we are looking at on the weekly time frame. And we can see that on the weekly, you can see it's a little bit clearer. Price traded into that discount, fair value gap of the monthly, created a shift of market structure, bullish, price retraced. You see that bearish correction. Price is now finding its way up. It's forming higher, high, higher, low. We need to see price action trade above that high. That's drawn liquidity. The old high here, the sell side imbalance, buy side inefficiency that we have outlined on the monthly time frame. You can see it's a little bit clearer on the weekly. You can see sell side imbalance, buy side inefficiency, the low of the sell candle here, the high of the sell candle here, low of the sell candle here, high of the sell candle here. That's how you identify sell side imbalance, buy side inefficiency. But the psychology behind it is that there has been one-sided price delivery because of the heavy bearish momentum that needs to be rebalanced. Then it needs to be mitigated by institutions. We need to see them mitigate all of this bearish pricing with a bullish repricing before we can start going down. And we may not even want to go down again. Institutions can do what they want to do, but going with what we have at hand, seasonal tendency tells us that we have a bullish price action towards from the June contract and getting into the September contract. And from the September contract, the dollar will most likely going to crash. And if the dollar is going to crash around that time, that June contract, do we have something significant to make it crash? Yes, we do. What is the drawn liquidity? It's simple. Look at this. A powerful model I usually use, or we use for some smart money traders, is finding setups between mitigation to mitigation block or breaker block to breaker block. Very powerful. If you notice that we had a bearish mitigation block that price reacted off around this level. Do we have another bullish mitigation? We have another bullish mitigation right below it. This tells me that this is the setup. You see that? The mitigation block here. After what? Failure sweep. Price failing to take out that low, previous low here. Price couldn't take it out. We had a shift of market structure bullish. It's a powerful setup. So most likely the dollar is going to trade into this bullish mitigation block after trading into that premium bearish order block with a fair value gap and rebalancing that sell side inefficiency that we see there. We may trade into that bullish mitigation block. Very powerful setup. Then on the weekly time frame, actually I just showed you what we are doing right now. Price is doing, it's currently bullish. Current order flow, bullish. Where is it trading into? The drawn liquidity. Where is the drawn liquidity? Any relative equal high, old high, or equal highs. Equal highs, relative equal highs, or equal highs. Three things. That's the drawn liquidity if you are bullish. All right. So we want to see the dollar trade into that high, that high, that high. So on the weekly time frame, look at what the dollar has been doing. Been forming higher high, higher low, higher high. You see that? Price traded into the bearish order block again. Price found support at the bullish order block, sorry, right here. Sorry, the bullish order block, right here. When dealing with order blocks, I mentioned we use the candle with the largest body. So bullish order block and a fair value gap that was violated by the left. See that? So price traded into that bullish order block with that fair value gap that was violated. Again, this is resistance turn support. Resistance turn support. Then created another bullish expansion. What do we see? In a bullish order block, bullish order blocks will support higher prices. In a bearish order flow, bearish order block will support lower prices, but we are bullish. So we expect that bullish order blocks will keep supporting higher prices. So The new bullish order block supported the retracement again into that order block with a fair value gap attached to it. Notice there's a fair value gap right at that. Let's just use this right at the order block. Remember, I mentioned the most valid order block is the one that has a fair value gap attached to it. Price traded into that bullish order block with a fair value gap and created a new bullish expansion. What do we see again? Price created another bullish order block. Let's just use this bullish order block. And right now the dollar is reacting off that bullish order block. So where is it trading into the next day on liquidity? Equal highs, you can see that. Old high or relative equal high, and ultimately the drawn liquidity above that fair value gap on the sell side imbalance by side inefficiency. A simple hack for determining drawn liquidity is when you have a fair value gap residing above an old high or relative equal high or equal high. That fair value gap is the main drawn liquidity. If you are bearish, you need to identify fair value gaps below old low or equal lows or relative equal lows. So this is where we are going to on the weekly time frame, and this is also in sync with the idea that the seasonal tendency chart is telling us. The seasonal tendency says that we're going to go bullish from this season and getting into the September contract. So on the daily time frame, look at it's even clearer now. So what am I looking at on the daily? On the daily time frame, I'm looking at market structure. I'm looking at price creating structure in the direction of the monthly and weekly order flow. On the monthly, remember, it's order flow, where price has traded away from, where price is currently, where price is going to, just like we have showed you. On the weekly, we are looking at expansion, retracement, or impulses and corrections, simply on the weekly time frame. On the daily time frame, we are looking at market structure, paying attention to market structure. If we are bullish, we need to see the daily time frame creating bullish market structure, higher high, higher low, higher high, higher low. You see that? If we are bearish, we need to see the daily time frame creating lower low, lower highs, and that is it. That's everything I'm looking at on the daily time frame. So on the daily time frame, you can see that we've been having bullish market structure, higher highs, higher lows, higher highs, higher low. Look at this. I can see a powerful institutional order flow entry drill setup. Look at this price action created. Let me take this out, or let me leave it. Let's just pay attention to this. Look at what happened. Price created a higher low at the bullish order block right here on the daily time frame, higher low, then created a shift of market structure bullish. Let's pay attention to this. Price took out the low, price created the high. This is a bearish breaker. Sorry, a bullish breaker. Sorry, bullish breaker, bullish breaker, bullish breaker. After taking the low, boom, shift of market structure bullish. So that's a bullish breaker. Breakers are powerful. It tells us in their order of importance after mitigation is breaker block. So it means that the breaker block will support higher prices. The dollar consolidated for a while, accumulated, then manipulated into, this manipulation is to engineer retail to sell. Retail traders would think this is shift of market structure bearish, and they are loading positions to keep selling. Meanwhile, we can see that in the direction of the monthly is not showing an interest to take out the monthly lows. The monthly is heavily bullish, current order flow. Weekly is showing off that we are in a current bullish order flow too. Expansions and retracement is what has been happening on the weekly. And order blocks supporting higher prices on the weekly, bullish order blocks. On the daily, market structure too is bullish. This wasn't a clear bearish shift of market structure, it was simply consolidation or accumulation, was accumulation of new contracts. So once institutions or smart money accumulate contracts, they are not just going to continue up, they are going to manipulate all the retail traders who perceive that it's going to go down. All right? Because this looks like breakout strategy, and they have added a lot of positions because it has, it broke out of this consolidation. So they've been selling. Okay, but while you are selling, you should see that now we have a bullish breaker. Took out the low here, very tiny, all around that bullish order block. Confluences. First is a bullish order block. Price sat on that bullish order block. Created a shift of market structure bullish. Look at the momentum of the daily candle, showing so much energy in the buy candles and little energy in the sell candles. So much energy with the buy candles, little energy with the sell candles. This alone should tell you that we are really in a heavy buy trend at the moment, at least. Okay, so price sat on the bullish breaker and created a swing low. A swing low is a 3-candle price action with the middle candle having the lowest low. It's actually reversal patterns. Middle candle having the lowest low. You can see 1, 2, 3 candle. Middle candle has the lowest low. Once you see this, it's a reversal pattern that lets you know that we are going to continue in the trend, or we are going to start retracing or reversing, and especially on the daily time frame. Every time a trend is about to start or continue, a swing low will form or a swing high will form. Look at this place where price sat on the bullish order block. It formed swing low, 3-candle price action. 1, 2, 3, and continued. Okay, so that is it. Now we are bullish. So where are we going to trade into? Current drawn liquidity, very powerful. That old high. What's the next one? You see that relative equal high is very, very interesting. This is very, very, it's an incentive for smart money. It's too sweet to be ignored. So smart money is going to trade into that, the high of that consolidation that happened, and the old high here, the volume imbalance, the old high, and ultimately those highs that we have outlined on the weekly time frame, just like I've showed you. All right, so now I know from a higher time frame perspective, we are bullish, the monthly, the weekly, and the daily time frame. How am I going to frame this into my day-to-day trading? I just go down to the 1-hour time frame. What am I looking for on the 1 hour? I'm simply looking for price action to trade into a significant institutional reference point of the daily, and just give me shift of market structure bullish. For every retracement into a discount level, I will keep buying. For every retracement into what? A discount level, I will keep buying. So look at this. As price traded into that bullish order block, and the breaker block, like we have seen here, the line there, the bullish breaker, price created a shift of market structure bullish on the 1 hour. Shift of market structure what? Bullish on the 1 hour. Okay, bullish shift of market structure. At the time the body of the candle closed above that high, right here, this was a lower high, price formed higher low, shift of market structure bullish. Now we know we are in a bullish market structure of the 1 hour. How am I going to enter? I wait for price to trade into, to reprice into internal range order blocks of fair value gaps. Internal range order blocks of fair value gaps. So price traded into the bullish order block here within the internal range. The other block, the mitigation block here, you see that? Mitigation because there was a failure swing, failing to take out the previous low and shift of market structure. This is a bullish mitigation, and there's a bullish order block around it. The other block has a fair value gap. You see that? Price traded into that level. I will look for 5 minutes shift of market structure around this level. 5 minutes time frame, you look for shift of market structure. As price returns into the internal range as well, you buy. And that is it. So we bought the first expansion here last week. So this week, what are we seeing? Price traded again into, look at this, traded into a discount level from the low here to the high of all of this price action, all of this one move here. If you put a Fibonacci between the low to the high, price traded into a deep discount. And what do we see at that level? Order block. You see that the same order block that was retested can be retested many times. Also because this is in confluence with the midweek or the new week opening gap. For some of you that have an idea, the new week opening gap is always an incentive for price action. All right, this was the opening gap for last week. You can see on Monday, that Sunday to Monday gap here. Price traded back into that gap, and there's a bullish order block there. There's a bullish mitigation. And now the dollar is giving us that impulsive move. How are we going to buy? Patiently wait for the dollar to create a new shift of market structure bullish. Hopefully when it takes out maybe this high. Once the dollar takes out that high and returns into internal range order block of fair value gap, let's say this guy here, or the fair value gap that will be created in the process, all right, I will be looking to buy the dollar into the high here, the highs there, and all of those highs. So what do I do with this? Once the dollar is ready to buy, I just go down to the GBP USD and look for the opposing, because foreign currencies and the dollar index have and a negative correlation, or rather, what should I call it now? If the dollar is bullish, GBP/USD is bearish. If the dollar is bearish, GBP/USD is bullish. So once the dollar is ready to buy, I'll just go to that, my dollar, my GBP/USD and Euro/USD, and I'll look for a crack in correlation to validate this pricing or this price action. And then I'll look to sell. Once this guy is ready to buy, we sell those guys. We sell those guys. Okay, so let's just look at GBP/USD briefly. The 1 hour. I don't even need to even go hard on it. Just the 1 hour will do. So GBP/USD 1 hour time frame, or Euro/USD or GBP/USD, anyone? Very good. You can see that. You can see that the impulsiveness you see on the candles is already a sign that we're ready to start going down. You can see that. This is the 1 hour time frame of the GBP/USD. So simply put, if you look at structure, it also created that shift of market structure bearish right here, whether you're using this. So we had a shift of market structure bearish, and GBP/USD traded into a premium order block, bearish order block right here, just like we see also on the dollar, traded into a premium bearish order block. Now it's showing so much willingness to go down. All right, show much willingness to go down, especially because it took our liquidity above that high here. Okay, the high that led to all of this new structure, took out the high there. So now we are looking at shift of market structure. Once the dollar is ready, we'll look for this guy to reprice into internal range, and we'll be looking to sell GBP/USD and Euro/USD while we are buying the dollar. So you can even do 15 minutes time frame for more insights. For more insights, you can do 15 minutes time frame, and for better strategy or approach, you can even trying to see if I can all right, so let's just do this. I think that is fine. So that's what I'm looking to do, to buy the dollar and sell GBP/USD, Euro/USD going into the June or September contract. Yeah, going into September contract, and before we start selling the dollar and buying the opposite, guys. All right, so that is my analysis, and I hope that you find this very insightful. If you have questions, maybe. If you have questions, then I think you should ask. Thank you so much, guys, for staying with me.
All right, sir. Thank you so much. Thank you. Thank you. If you know this session was powerful, just drop fire emoji, drop it. Thank you, sir. Message in the chat box. Drop it. Let's see it. Let's see it. Let's see it. If you have your questions, you can also just type them in the chat box. We just pick one or two randomly to, ask. We are about 60 something. I'm not seeing, thank you. Thank you, Mr. Bala.
Thank you, sir.
We are so grateful for having you this morning.
Thank you, sir.
We are so grateful. Our time is fast spent. This is already 9:33. We'll be coming for the questions shortly. While we do that, want to invite our boss. He's currently also online. Mr. Ejimi Olufukeji. Good morning, sir. Okay, while boss is We're still waiting for him to come up. We just pick 2 questions. I'm seeing some questions saying, does this apply to gold? Yes, it does. It does. This is DXY we are talking about. Yes, it does. Trying to see other question. This is good. Okay. I have a comment from Mr. OK saying this is good. Exactly how most independent traders trade to follow the institutional traders who use it what we call depth of market and footprint. Thank you for that beautiful comment. Thank you for that beautiful comment. Emmanuel God's Love said, where is the destination of the current sale on GBP USD? I believe you want to rewatch the video where you explained everything. I believe this session was insightful for all of us. I want us to do something quickly. Oluwaseyi, okay, let me take one question. Oluwaseyi said, you mentioned so many terminologies. How or where can one find resources to help? So I give Mr. Bala just a few minutes to answer that question. Mr. Bala, can you hear me?
Just go to my YouTube now. YouTube handle for free. You can learn some of those things there.
Okay. Answers the question, Mr.
And also,
Oluwaseyi.
I think they can, if you want to sign up, you can sign up for the Forex Bootcamp course with BFT as well. For this course is available already. Most of the terminologies I explained, you can find it also.
All right, thank you so much, sir. I think that answers the question, Mr. Oluwaseyi. I want us to do something quickly. While Mr. Bala is still on, you take a screenshot of this session, take a screenshot of this Zoom section. If you're watching from Zoom or you're connected on YouTube, take a screenshot of the session and tag him on YouTube. I want you to tag both Mr. Francis, VFT, Olufukeji, and Okta. Tag us on IG, tag us on Facebook. We're going to, repost or we're going to repost your taggings. I'm trying to see a question here. Okay, how do you manage your trade when there's a surge as a result of fundamental or news that drop price back into your zone where you want to take your trade from? I believe we're going to be answering this question probably tomorrow. Our time is already fast spent. Our time is already fast spent this morning, and it was spent very well, right? I believe we all enjoyed this section. We're about 60 something on this Zoom call, about 62, right? I want us to follow the instruction. Do well to take a screenshot of this session. If you're watching from YouTube, you're watching from Zoom, take a screenshot of this session, go on your IG, tag Mr. Bala Francis, tag Value Flow Trading, tag Olufukeji, Ejimi, and also Okta FX. Tell us what you learned from the session. Tell us what you learned. I'm seeing a question here, Liberty Williams saying, is there going to be a live streaming of the Abuja Trading Bootcamp for those who may not be able to make it to Abuja? Currently, I don't have an answer. We believe probably there will be a provision for that, but currently, as we speak, we don't have an answer yet. Some session of the bootcamp will be live streamed, but other session might not be live streamed because of the sensitivity of the information we're going to be sharing. So if you're able to make it live to the event, I believe you want to do that. All right, guys, while we take a screenshot of this session, I'd like to inform us, like we all know already, that we're coming to Abuja in the last week of May. That's that's the 30th and the 31st of May. We'll be in the city of Abuja. We'll be hosting the boot camp, the Traders Boot Camp. It's going to be an amazing session, right? Make sure you plan, you prepare for this meeting. If you need to book a schedule or request for a leave from your workplace, you should do that. If you know that you have to travel down, ensure you do that. It's going to be worth every second of your time. Do well to be there. Elisha Beatrice said, the registration link is not working. Is there a way we can get it? I mean, the Abuja Bootcamp. We apologize for that. It's going to be up in less than 3 to 5 minutes. is going to be up. And also for our guys, the publicity for this event is currently on. If you know, a lot of persons have been sending the screenshot of the challenge, and we are seeing your work. Today's own will be sent again. Post it on your handle, post it on your stories, and by the end of the day, you do well to send us the views you have. The highest is going to be selected, and you're going to be gifted and rewarded for your effort. You're going to be rewarded for your effort. Somebody is asking, can someone help with Mr. Bala's YouTube channel? That will be sent in the chat box shortly, and also his social media handle. In the city of Abuja, somebody is asking, where's the venue? It's Merit House, Metama, Abuja. Merit House, Metama, Abuja. I can just do a simple Google search of that location on your Google map. It's going to take you from wherever you are to the event center. Right, that will be all for today. Thank you so much, guys. So don't forget, take a screenshot of this session and tag us on IG, on Facebook. Tag Mr. Bala, tag Value Flow Trading, tag Olufukeji Ejimi, and finally, you should tag Okta. Tag Okta. Letting us say thank you, a big thank you for this session, what you learned from the session, how it benefited you. That will be all for today, guys. By 3 o'clock, we'll be convening again for our new. If this session was valuable, I know it was valuable for you. We want to see your favorite emoji, and that will be our sign out package for today. Drop your favorite emoji in the chat box. Drop something to say a very big thank you for us and the team and the entire team handling this event for today. We want to say a very big thank you. Joshua is saying thank you. Fubi is saying thank you. DFT, thank you. Okta, say thank you to Anthony Livinius. Say thank you. God of Indices, thank you. Benjamin Igwe. So that will be all for today. We convene at 3 p.m. for our New York session. Cheers and God bless, guys.